Hello and welcome. You're with us on Business Today. I'm Abha Bakaya. Here are the day's top stories. After a volatile day of trade, markets ended in the green for a second consecutive day. Financials led the rally while metals continue to lose sheen. A big warning from commodity guru Jim Rogers tells Business Today TV in an exclusive chat that this will be the worst recession of his lifetime. Says rising debt is one of the biggest concerns. $7 billion, that's the amount of losses suffered by PSU oil companies due to price freeze in the past 10 months. According to global rating agency Moody's, it adds that their earnings will continue to remain weak. Wholesale wheat prices up more than 18% in a year. Government says this is not abnormal. Reiterates there is enough stock of wheat and rice in the country. Rishi Sunak emerges as the favourite to replace British Prime Minister Liz Truss as party MPs reportedly revolt against her. Major embarrassment for the Prime Minister as the new Chancellor of Exchequer reverses most tax cuts. A highly volatile trading session ended in the green after starting the day in the red. Markets clawed their way back into the positive territory and held on to gains. Sensex was up nearly 500 points, shutting shop at 58,410. Nifty also ending with gains at 17,312. The rally was led by financials today. Nifty Bank jumping 2%. Nifty PSU Bank was up 4%. SBI, Bajaj Finserv, Axis Bank, ICICI Bank and NTPC, the top blue chip gainers. The metal pack continued to be under pressure. Hindalco, L&T, JSW Steel, HCL and Britannia, the top laggards in trade today. Our global business editor, Udayan Mukherjee, joining us now. Udayan, what are you making of the market trajectory? It's festive week here in India and markets too seem to be feeling upbeat.
I'm glad to see, Abha, that the market's holding up in the run-up to Diwali because, last Diwali to this Diwali has not exactly been great. I mean, we've had our moments. I mean, there have been times when the market's knocked on the doors of 18,000 on the Nifty, almost promising to move towards a new high despite the global headwinds. But then it's been pegged back because the global headwinds have really been very, very severe. So, there are two ways to look at what has happened over the last 1 year. One is to sulk and say, we've had a down year. Most people have not made too much money. Diwali to this Diwali, at least as things stand now, is down about 4 or 5%. But I think that's missing the big picture because you're down 4% at a time when the S&P 500 is down 25%. So I think the other way to look at it is that the world has collapsed around us in the last 1 year and so much bad news has come to the fore and the market's flat over the last 12 months. So I think the stock market in India has been remarkable in that sense, in at least preserving wealth for people, if not creating new wealth over the last 1 year. So as we look forward to the next year, I think the big question is, will the global tidings get even worse? Will the rupee come under even greater pressure? Will there be even more global selling? And will we have another ordinary or a down year? Or having done time over the last 12 months, the market can actually start rebuilding once again. And sometime between this Diwali and next Diwali, we make a new high in the market and we start generating some positive returns. Because relative returns are only meaningful for fund managers. People like you and me, we want absolute returns. It's not enough to say we fell less. We have to go up. So the challenge this year for the market is to give us some positive returns. And I'm hoping that at least at some point of the year, we'll start breaking out of this vicious bear grip.
Udayan Mukherjee with his take on the markets and really what to expect as we head towards the end of the year. Now, with the world economy in doldrums and fears of recession looming large, global markets have been marred by volatility. Even the commodity market has seen wild swings. Are gold and silver still safe havens to hedge over volatility? I spoke to commodity guru Jim Rogers, who says it will be the worst recession in his lifetime. Listen into an excerpt of that conversation.
We're chatting last year around this time, Jim. I remember because at that time everyone was busy buying gold, as they will be this week because it's very auspicious. It's festival season here in India. And when we were speaking last year, you had warned that after the third time the Fed would hike rates, the world would go into a deep recession. And I've been waiting a year to ask you, what is preventing the world from slipping into that recession? Because markets seem to be bouncing right back up each and every time.
Well, that's very strange. Markets, most where I am, are going down. I wish I were there. I should be with you, Appa. American markets down, Japan, China. I thought everybody was down.
So is this only going to get worse from here on? Do you feel this is the beginning of an impending recession, the worst ever, like it's been predicted by some?
Well, before this is over, yes, it's going to be the worst in my lifetime. In 2008, we had a problem because of too much debt. Since 2009, the debt everywhere has skyrocketed. So the next problem has to be the worst in my lifetime because the debt has gotten so much worse. But having said that, there's a huge amount of pessimism around right now. And normally when there's a lot of pessimism, something happens and people get happy for a short time. I don't know, this is not a prediction, but if there were peace in Ukraine, oh my gosh, the pessimism would disappear and stocks would go up. So something is probably going to happen. We're probably going to have one last rally, but that will be it, Appa. Then we're coming to the end of the line. Be worried. Watch business today.
So, no, this is why I wanted to talk to you, Jim, because I think that for a lot of investors that are coming off a really good run, any glimmer of hope is an opportunity to buy, right? Because all this while they've been thinking that markets in the long term are going to continue to go up, et cetera, et cetera. So now, does one look for an exit at this time?
Well, I have not started selling. I have a few shorts, but I have not started selling short yet. But yes, many people, especially after a decline like this, look for a reason to be optimistic. Let me remind you, Appas, there have been many times in history when stocks have done nothing for a long period of time, or even declined for a long period of time. Stocks don't always have to go up. Write it down. Stocks do not have to go up all the time. We have had many long bear markets, and we're going to have another one now, soon.
Jim, what are you still long on then? Let's talk commodities. Let's start with your favorite, of course, silver, gold. Where are you at with some of those investments or trades? What are you tracking or looking at?
I own some silver. I mean, I owned silver last time I saw you, but I wasn't buying it. I'm not buying it still. And gold, I'm not buying gold or silver. I'm not selling. I'm waiting somewhere along the line. I hope I'm smart enough to buy more gold, more silver. Want to buy more agriculture. Agriculture has been very depressed for a long time. These are places that I'm looking, things that have been hurt by the epidemic, transportation, tourism, travel. I'm not buying now anywhere, but I'm watching them go down. And the more they go down, the more interesting they get to me. I know we're not going to take a boat to New York. We're going to fly to New York again someday. And airlines will be attractive again someday. And I know when we get to New York, we're not going to sleep in the park. We're going to sleep in hotels. So some of these areas that are being very badly hurt by the epidemic usually lead to opportunities.
It's interesting you mentioned that because we're seeing airfares, go crazy. This season, prices have skyrocketed worldwide, international fares, domestic fares here in India. And we're actually seeing the launch of new airlines here in India as well, despite it being such a cost-intensive industry. So clearly there's something brewing there. Do you feel this is some kind of a revenge consumerism or recovery for the last 2 years, or is this the beginning of an altogether new trend when it comes to the travel and tourism sector?
Well, it's both. It's both. It's certainly the recovery. Things were so bad, and suddenly people want to travel, and there are not many seats, not many employees, not many pilots. So yes, that's part of what's going on now. But it will lead to a basic change in the airline industry because people have not been buying a lot of planes in the last few years because of the epidemic for other reasons, but then exacerbated by the epidemic. So who knows? But I expect to find great opportunities in international airlines before this is over.
Okay. On gold and silver, on precious metals, Jim, what's the kind of price target you're looking at, or the kind of upside?
Apple, please watch BT. I mean, you guys know I am terrible at market timing. I'm the worst market timer in the world. I usually try to let the market tell me if and when I see silver really collapsing more than it is now, or gold. I hope I'm smart enough to buy more gold and silver. If I were buying today, I would buy silver. Silver's down much more. Silver's down 70% from its all-time high. Gold is down 15% from its all-time high. Those are rough numbers. But no, I would be buying silver today if I were buying either, but I'm not buying either yet. I'm waiting to see a time when there's real despair, and then I hope I'm smart enough to buy more of both.
So what happens to currencies at a time like this? What's your view on the dollar? We're seeing this tremendous shakeout and the impact it's having across currencies, especially here in emerging markets.
Well, I own a lot of U.S. dollars. I told you last time. The reason I mean, the U.S. dollar is a terribly flawed currency. America is the largest debtor nation in the history of the world, and it's getting worse every day. So now you're going to say, like a good reporter, you're going to say, why do you own dollars then? What's wrong with you? I own them because when there's turmoil, people look for a safe haven. People think the U.S. dollar is a safe haven for historic reasons. The U.S. dollar is going to get overpriced. It could turn into a bubble too. I hope I'm smart enough when that happens to sell my U.S. dollars. And your next question should be, well, what are you going to do with the money then? And I don't know yet. I wish I did. I will watch Apple on BT some more to find out what to do with it. I don't know. Theoretically, it would be the Chinese currency because it's so big. But the Chinese currency is a blocked currency. I can't just go online and buy and sell it like I can the yen or the euro or something. So I don't know where I'm going to put my money.
Okay. And in terms of timeline, so we're looking at, you've been speaking about it when you were saying the worst bear run. Are we looking at the end of the year? It's really around the corner, or would you give it 6 months?
Well, this year so far has been one of the worst the first 8-10 months of any year in the American stock market. It's been historically, it's been significant how bad it has been. But as I say, before it's over, I expect it to get much, much, much worse. I will see some companies go down 60, 70, 80%. Some companies will go bankrupt. I'm talking about U.S. companies will go bankrupt. No, this bear market is going to be a mess. You're not old enough to remember bear markets and how bad they can be. They can be really, really devastating and surprising.
Wow. So in this shakeout, is it going to be across the board, Jim, or do you see certain pockets that'll be worse hit? Tech stocks, over leveraged companies, clearly. Banks, we've been seeing all kinds of reports, at some key institutions. Where's the shakeout going to be?
There will be some probably real assets, whether agriculture or silver or some things will do well. They always do in bear markets. There are always a few sectors that do very well. I don't know what they are yet. I'm certainly optimistic in watching agriculture. I mentioned airlines. If they get damaged, the stocks get hurt more and more. One good thing about all this, it's good for you, because it gives you job security. Somebody has to report on all this. Somebody has to tell us what's going on. So it's very good for you and BT. It's not good for the rest of us, but it's good for you and BT. Well, I do look at India. I do occasionally, periodically buy Indian shares. I don't have any now because the market was one of the better markets in the last year or two. But if India goes down a lot or goes down more than others, I'm certainly interested in Indian shares. There's some really, really smart Indians, as you know, many smart Indians. You just have to find them. Some of them have moved away, but they're smart Indians in India. And I will be looking for smart Indians and good companies when things get really bad.
We take a very quick break on that note, back with more stories on the other side.
Everyone's busy finding what's trending. You're busy finding out why. India Today, for those who research before reacting. Download the India Today app now.
Welcome back. The government has countered the narrative that food grains are the main drivers behind high food prices and inflation. Talking exclusively to Business Today TV, Ashok Kumar Meena, chairman of the Food Corporation of India, said that it's actually other components which are driving inflation and that there is no shortage of wheat and rice in the country.
Is there anything to worry on the prices of wheat and rice in the country and about paddy procurement as well, sir?
As we showed in the presentation, there is sufficient stock of wheat and rice available with FCI to take care of minimum buffer requirement, as well as if such a situation arises, the stock can be used to keep the prices under control.
Sir, there was also concerns about rising prices and pulses as well. Atta prices, wheat and atta and rice prices were market-driven forces also. So do you think the prices are getting higher, or is the cause of concern for the government and enough stock is in the buffer of the government?
See, as far as the wheat and rice prices are concerned, I know because we have the stock available with us. So therefore, price rise will not be there. But general increase in prices which is happening is a general phenomena of inflation taking place. So I would think that normal price rise only will be there. There will not be any abnormal rise in the prices of wheat and rice.
And the CPI inflation is being driven by food prices, or because the RBI rate hikes is not being inflected or reflected on the prices of food? Any comment on that, sir?
See, even as far as food component of the CPI is concerned, it has various things including vegetables, pulses, edible oils. I am not aware about those commodities price rises. But my own hunch, as far as food grains of wheat and rice is concerned, the contribution in the CPI is not very high.
And essential commodities would be under price control and all is well, do you mean to say?
Yes, government has taken proactive measures to keep these prices.
For this year, 900 lakh metric ton you mentioned?
900 lakh metric tons of paddy is expected to be procured, which will translate to approximately 590 to 600 lakh metric ton of rice.
And farmers will get their due MSP as well?
All the farmers will get their due MSP in their bank accounts through the procurement agencies.
Let's take a look at what else is making news in the corporate world. Electronics Mart made a strong D-Street debut today with its shares listing at 90 rupees, a premium of 53% to its issue price of 59 rupees. The scrip ended the day at 84.5. Byju's has raised another $250 million from its existing investors. The company, which is India's largest in the edtech sector, had last week announced laying off 2,500 employees. Last month, it had declared its much-delayed results for 2021, announcing a loss of 4,588 crore rupees. GAIL has emerged as the winning bidder to acquire the bankrupt JBF Petrochemicals. Sources told BTTV that the PSU's resolution plan of 2,100 crore rupees has been accepted. JBF Petrochemicals has a total outstanding debt of 5,000 crore rupees. After a subdued set of numbers, ACC took a beating in trade. The cement maker surprised the street with a consolidated net loss of 87.3 crores for the quarter ended September. The company suffered losses due to higher fuel and power expenses. The Directorate General of Civil Aviation has initiated a probe into the recent case of smoke in the cabin of a SpiceJet aircraft. The civil aviation regulator issued a statement saying that the airline has been asked to send oil samples to Pratt & Whitney, Canada, to ascertain the presence of metal and carbon steel particles. The airline has also been asked not to send any of the aircraft engines to Singapore for maintenance and repair until the investigation is completed. SpiceJet has also been asked to take some technical measures. Just days after he took over as Chancellor of Exchequer of the UK, Jeremy Hunt has confirmed a U-turn on most tax measures that were part of his predecessor's fiscal plan. Hunt said that the UK will scrap plans to cut income tax indefinitely, and also cuts to dividend tax rates and tourist VAT will be reversed. The move is being seen as a big blow to the economic agenda of Liz Truss, the British Prime Minister. In fact, reports say that her party MPs are organising a fresh push to oust her this week. And once again, it's Rishi Sunak that the country is looking towards.
The end game has begun for Liz Truss. Sworn in as the Prime Minister of the United Kingdom just 41 days ago, a groundswell of opposition is building against her and her peculiar brand of Trussonomics from within her own party. British newspapers and tabloids this morning screamed that the 47-year-old was on her way out, that more than 100 members of parliament of her party, the Conservative Party, are ready to submit letters of no confidence in Truss to the party head. Another newspaper reported that discussions are already on to replace the Prime Minister with a new leader. If it happens, this would be the shortest stint for any British Prime Minister and spawn a million memes around no trust in Truss. A British tabloid has even started a YouTube live stream titled, "Can Liz Truss outlast a lettuce?" The question that Daily Star has asked is, will Liz Truss still be the PM within the 10-day shelf life of a lettuce? And it's again Rishi Sunak who's back as the front contender for the top post in the British government. Social media is flooded with calls for his ascendancy as the Prime Minister. More importantly, people are putting their money where their mouth is. A British betting aggregator site shows the odds on Rishi Sunak at 13/7, meaning a bet of $100 on Sunak will get you around $286. The other contenders are Jeremy Hunt, Ben Wallace and Keir Starmer. A bet on them will get you a much larger amount, indicating the chances of them becoming the PM are seen as much lesser than Sunak. Meanwhile, the pressure on Liz Truss to leave number 10 increased after the newly anointed Chancellor of the Exchequer conceded that the financial steps taken by his predecessor, Kwasi Kwarteng, were a mistake.
It was a mistake to cut the top rate of tax at a period when we were asking everyone to make sacrifices. And it was a mistake to fly blind and not to back up the economic plans that were announced with an independent forecast from the Office for Budget Responsibility.
Hunt followed up with this statement, seen as a direct attack on the leadership of Prime Minister Truss.
What people want more than anything else is stability. And that means political stability as well.
Even the US president, one of the staunchest allies of Downing Street, had some scathing words for the British government's economic policies.
I'm not concerned about the strength of the dollar. I'm concerned about the rest of the world. Inflation is worldwide. It's worse off everywhere else than it is in the United States. So the problem is the lack of economic growth and sound policy in other countries, not so much ours. And that's how it's worldwide inflation. It's consequential.
Liz Truss took oath on 10th of September and immediately set out to implement her economic policies aimed at boosting consumption. This included a massive tax cut of £45 billion without explaining how the fiscal hole will be accounted for. This resulted in the pound plunging to new lows, bonds and mortgage rates skyrocketing, and a huge backlash from within the ruling Conservative Party, which is hoping the 6-week debacle will be forgotten in time for the January 2025 general elections. Bureau Report, Business Today TV.
And that's where we leave it on the show tonight. Thanks so much for watching.
In Tuvalu, we are living the realities of climate change, sea level rise, as you stand watching me today at COP26. We cannot wait for speeches when the sea is rising around us all the time. Climate mobility must come to the forefront. We must take bold, alternative action today to secure tomorrow.
At an average land elevation of no more than 2 meters above sea level, my country will succumb to sea level rise. Mr. President, let me now speak of an issue that is of the greatest concern to my country: climate change and its consequential sea level rise remain the single greatest existential threat my country faces.
watching India Today.